So if you're an aggressive trader, what you can do, pull up your Fibonacci tool from swing low of this candle to the zone right in, and target can be 1 ATR or 1.618 retracement. So the price hit this zone below the previous zone which I've mentioned in my last videos, which is 1958, a zone from where we can expect another bounce. What an exact move we got here on net gas. Now if I see a good reason to enter, which is my bullish engulfer or a 382 candle or a pin bar candle, in that case I will take another long trade. Nice one. We had a nice push up out of my zone. Now price is heading towards a minor level of resistance. We do have a major level above which I'm paying attention for my counter trades, but I'm expecting some pullbacks once the price reaches 2.379, goes up to 2.429. Let's say if the price continues to push up and hit this zone, in that case I will take a little scalp of sell trade. Nice one. So as you can see, the price did react from the minor zone. On 1 hour time frame, I would mark my rejection area like this. So once we have a pullback to the zone with rejection as an engulfer or my 382 candle or a pin bar, all these are my entry condition that must happen in this area of value, or just a red candle here. Once we have that, we are good to go short. What do we have right here? The exact move we got here on net gas double top engulfing pattern. And what is stopping you to enter this trade? Now look for your entries on 1 hour and 4 hour time frame. So at this area, if you get a bullish engulfer, you have a good entry condition if you are an aggressive trader. But if you are not an aggressive trader, wait for a pullback formation of a double bottom pattern. Mark your rejection zone similar as double top. Now on 1 hour time frame, exactly the same. You need to mark your rejection zones. If the candle pushes back up, in that case we are still intact with the head and shoulder pattern. Only enter once we have a good reason to enter. What a nice moves we got here from net gas. That is why I love technical trading. I do look at fundamentals, but that is not something I majorly look at. That is something I look for my added confluence that adds some fuel in my technical trading and helps it to fuel my price to push up or push down. But primarily I look for my technical analysis, because all the technical traders, they look exactly the same. If you are doing technical trading, if they see a certain type of pattern, all these technical traders, they start buying or start selling. So that is why I showed you all the videos that happened from the last 10 days. And as you can see how nicely the price pushes up in the direction I predicted. And that is what I always teach you here on my YouTube channel, to learn the technical skills, to learn how price action works. I don't come here on my YouTube and make a 1 minute or 2 minutes video just to say the price is pushing up or price is pushing down. I want you guys to learn, to understand the conditions so that you understand the trading in more depth. And if you want to make this as a full-time career, that is how you will learn, and you will only become a successful trader if you work on it, if you learn it, and if you get a right education. So in this video, I'm just going to talk about natural gas, because I know we got so many natural gas traders, and that is what I want to show you. Some nice conditions we had, how to trade efficiently, and the way you can take your trading to the next level. So if you want to listen to this part of the video, trust me guys, it will be really beneficial for you. If not, you can skip it to the timestamp right up there. So this week, I'm not going to show you all the zones I've sent to the priority members. We had some nice trade out of the zones, but it will make this video really long. So just want to keep this video a bit shorter just by showing you the net gas results and the way we can enter the net gas trade. I'm going to show you the weekly zones and how to scalp in my next weekend video. The last video, it stopped right here. In my last video, I've said I want to look for a rejection at this rejection box. And the last video, the candle was somewhere here, but it did not close. Now I want to show you the last condition right here. So like I said, if we have a candle that pushes back up, we have a buy condition. Now if you are learning my full course, or if you are my priority member who is in the group from last couple of months, because if you just joined the group and stayed there for 1 month, you might not have seen this condition. But if you are in the group from long time, then what do we have right here after the rejection market? Let's do it like this right here. We had a nice 382 candle. If you see a clear 382 candle, and in that case, that is your entry. And if you follow me from a couple of months or a year, you know I take an entry as 280 target or 180 target, or I keep my stop loss below the wick. Now, if you entered your initial targets with 280, looking at the fact we are trading on 1 hour time frame, your entry will be at the close of this candle. If you hover over this pin bar, the ATR is 3. Let's do 680 above and 680 below. In that case, we have a protection of this rejection zone, and we have the stop loss below this wick. So that is a good way to keep your stop loss below if you are trading a double tops or double bottom patterns. Now, as you can see, our take profit has been hit nicely. Now, I want to take you back in the time. Going back in the replay mode, I want to teach you the conditions, the way you trade the major double bottoms. This is not a major double bottom. This is a double bottom pattern, but it is something I call a less aggressive way to enter from the trend continuation zone. Double tops and double bottom patterns are the reversal pattern. When the price wants to reverse, it forms a double bottom or double top pattern. In this case, a double bottom pattern at the major area of value. Once that happens, it is a signal that price wants to push up, and that happens right here. It happens when the price is pushing down in a downtrend and then forms a signal that is a reversal signal. Now, I want to take you back in the time to show you the entry pattern and condition. So let's go back in time and let me show you what happens when the price is pushing down in a downtrend and then forms a reversal signal. Now let's go back and let's do it right here. So right here at this point, what we were looking at this major area of value, and in that case we want to enter either in an aggressive way, that is your engulfers, or that is your pin bars, or less aggressive way, that is your double bottom pattern. So if you're an aggressive trader, you will enter aggressively. That is what I'm going to show you in a moment. So we have a hit of the area of value. Now at this point, if you are an aggressive trader, either you want to go as an engulfing pattern, that is an aggressive entry, or which is the 382 candle, 25% candle. In this case, we need to see if it's a 382 candle or 25% candle. So from swing low to swing high, it is not a 382 candle, but it is a valid 25% candle right here. So in this type of conditions, I normally prefer to enter few pips above this pin bar. Now it is a pin bar, it is a 25% candle. In that case, if you want to enter in this trade, I would enter right here. I'll keep my stop loss below this wick and I'll go 1-to-1 first, something like this. Or for commodities, I normally take two trades. I set up one target, which is 1 ATR. You hover over this candle is 4, and 4 will be your initial targets, something like this. So let's see if our first target is hit or not. I'll keep both positions open. Whatever hit first, I will act accordingly. Now I want to show you what happens. Now price is pushing up and immediately hit the take profit 1 and take profit 2. So if you're an aggressive trader, you have your take profit hit. That's cool. Now I want to fast forward this video because like this, it will make this video really long, but I want to take you back to the double bottom pattern. Now once your take profit is hit, what you want to see, either you will enter your short trade, which you have already seen in the previous videos. Now you want to enter in a less aggressive way, which is your double bottom pattern. Now at this point, price is now pushing back down to the area from where the price has previously pushed up and from where you have entered aggressively. So at this point, what we do, we prepare ourselves by marking the rejection zones like this. So that is how the professional traders trade. They look for the condition, they observe the market, and they see if the price action tells them to enter the trade. Only then they enter the trade. Now in this case, we prepared ourselves. Now we don't know what's going to happen next. We just prepare ourselves. If we have a push down in this zone and we get a reason to enter here, then we are good to go long. So let's see if the price hits the rejection zones or not. Now what happens? The price pushed down. Now at this point, would you take it as an entry condition? No, you're not, because it is not a valid condition. It is not a pin bar. It is not an engulfing candle. It is not a 382 candle. So what you want to see, you're still looking for the conditions to enter your trade. Now let's see if we get a condition or not. Now what do we have? We have a completion of double bottom engulfing pattern right here. So if I see this type of big momentum candle, what I normally do, I want to enter with a pullback. But in this case, price just pushed up, because like that, if you entered with this big engulfing candle, in that case your risk to reward will hinder, because you'll have to keep your stop loss below the rejection zone and you have to keep your take profit at least 1-to-1 risk to reward ratio, something like this. So let's assume we have entered at this big momentum candle and let's see what happens. Price now pushing up and hit our take profit. Now, if you are a less aggressive trader, you would wait for the pullback for commodities, or if you have entered here with the completion of double bottom, we have our take profit rate. So that is what you call entering with a good condition. Now, as you can see, the price was falling down from long time right here. Since then, the price formed a pattern here, but it did not wants to reverse because it is a minor zone, right? Then it falls here. We had a pullback from the minor zone, and then it falls here at the good level of support where we had a signal of reversal with this double bottom pattern. Now we have three types of entries for double bottom patterns. The entry number one is which you got right here. This is the entry number one, and in that case, what you do, you enter at the close of this candle and go 1-to-1 risk to reward ratio, which is right here. The target has been hit. Now entry number two happens at the break of neckline, which is right here. The price action formed the neckline, something like this, and this is the neckline of the pattern right here. Now the entry number two is a break and close of the neckline, which is a less aggressive way to enter. As you can see, the price did push up, break and close above the neckline, and we have an entry condition right here. In that case, I'll keep my stop loss below the neckline and go 1-to-1 for my initial targets like this. So we have an entry number two, and see what happens. Price hit the take profit with the entry number two. Now at this point, we are looking for the entry number three, which is a very less aggressive way to enter. What is that? Which is a pullback to the neckline. Pullback to the neckline followed by a bullish engulfer, followed by a pin bar, or one of the entry conditions. Now let me show you what happens. Price is now back in the neckline, and let me adjust that. Yeah, that looks good now. So price is now inside the neckline. Now once the price is in the neckline, we use this zone as our trend continuation zone to enter in an aggressive way. We have engulfers or a double bottom pattern. It is a minor double bottoms, which I call a less aggressive way. A major double bottom is right here. So this is what we will look for, a little scalps out of these zone. Now at this point, if we have a good bullish engulfer, in that case we are good to go long. Otherwise, we keep looking for entries on 1 hour and 4 hour time frame. So what do we have right here? Let me show you. Price pushed up, and if you look back on 1 hour time frame, we already had a nice 382 candle, and that is enough to hit your target. And as you can see how nicely the price pushed up out of this double bottom pattern, and now we are in the current date. So as you can see how nicely we got a conditions, how nicely we got the entries. As you can see, we had an entry here, aggressive entry, then we had double bottom entry here, then we had a break of a neckline entry here, then we had a push down and a retest of the neckline, and we had an entry on 1 hour time frame. So all these are the entry conditions, and that happens with patience. That didn't happen just overnight. We had to wait a couple of days, couple of hours to wait for the good condition, because we are trading here, we are not gambling here. For trading, you need to have that edge over the market, and if you have the edge over the market, if you know the rules, you know the strategies, only then you can able to make it in a trading world. So that is what I want to teach you guys. Look for the conditions, look for the entries, and if you're learning from somewhere else, make sure you stick with that. Do not change your strategies just by looking some random videos over the YouTube. If you are doing a course, or if you're learning a strategy, if your strategy has proven to be profitable after doing a back testing in a large sample size, then stick with that. We have a losing streak, and then we have a winning streak as well. As long as your strategy has proven to be profitable over time, then we are good to keep that strategy in the portfolio. So that is what I teach to my MMTA full course students. The exact rules of entering the trade, the way you enter the trade, the way you set your stops and target, the exact rules for that, and all the different strategies, all the strategies that tested and proven to be profitable in the large sample size. So if you're interested, you can check that out at the moneymarkers.net or moneymarkers.uk if you want to take your trading to the next level. Otherwise, if not, that's totally cool. Just hit the subscribe button so that you keep on getting the free content like this and keep on receiving the daily updates, so that we can all trade together and trade efficiently. So that is what I wanted to show you guys. I hope you got a value out of this. If yes, hit a like button. For me, it helps me in the YouTube algorithm. Now at this point, the price is now in the current date, and now what to expect from here. So starting now, I'm going to start my analysis with natural gas, gold, silver, and crude oil. Now I want to give you a few conditions to look for your possible buy or sell trades. Now as you can see, the price successfully made it to the rejection zone of this neckline. If you have not seen the first part of the video, then it will be good if you go back and check the first part of the video so that you can understand the concept of this type of pattern. Now what I'm looking at personally, we already get a nice rejection of 382 candle, and we got few rejections right here. So I can see a bullish pressure at this area. Now we are also getting this pattern right here. Let me show you on 1 hour time frame first. After a nice double bottom, price is now moving sideways. So let me show you that we had a push down, and now since then price is just trading within this box. So it forms this pattern here, right here, and at this point, if you are not an aggressive trader, then you want to wait for a breakout above. So the breakout will be a close of a candle, a complete close of a green candle. Once we have a complete close of green candle, we have an entry, and right at the close we had an entry. Keep your stop loss below this pattern. That is what I'm looking at on 1 hour time frame. So if you are not an aggressive trader, wait for this. Now on 4 hour time frame, exactly the same. We had a nice rejection right here, nice rejection right here, and the price is now trading in between this box. So similar as 1 hour time frame, I want to see a complete break and close above this box. Once the price completely break and close above this box, I will go 1 ATR or 2 ATR for my target. 1 ATR will be my initial target, like I just explained in the first part of this video, and I'll keep my stop loss below, somewhere below in this box. So looking at all the condition, looking at the nice double bottom pattern, all the entry number 1, entry number 2, and then a retest, which is our entry number 3. If you're an aggressive trader, that is your entry already, and you are in a trade already. But if you're not an aggressive trader, wait for the candle to close above this box, and you can keep your stop loss below. Take profit wherever you want to take it. If you want to manage your trade, this is the zone till where you want to manage your trade, which is 2.334 goes up to 2.437, from where I want to see if we have a rejection here, right here. If you have a rejection, we'll go another short. If you have a break above this high, then we have a good chance that the price will keep on continue to push up in a trend, and we have a reversal situation in that case. So very simple, guys. Just look for the conditions, be patient. Once you have a condition, I've shown you on 1 hour and 4 hour time frame, break of this box will be a less aggressive way. Otherwise, it is already your entry right here. For long, looking at the fact price is rejecting from this box few times, I'm expecting a price to push up. Now it totally depends how the market opens after the weekend. If the market opens, let's say above here crazily somewhere, then in that case we'll start looking for the sell conditions. If the market opens somewhere above here, then we have a good bullish pressure, and then I'll expect price to push up further to this yellow box I've just explained. If a price open below in gap, in that case I'll see the momentum, and in that case I will want to go only short with my entry condition, like my bearish engulfer and retest of this area of value. So keep looking for conditions I've just mentioned. Only enter once to see a good reason. If you're confused, just DM me on Instagram and I'll get back to you as soon as possible. Let's check gold. So a nice push down out of gold. Let me show you what I've said in my last video. Right here, if the candle won't closes above this rejection box, in that case we have a good chance that price will fall from here. So that is what we need to look at. Once this candle is closed, only then we have a valid double top pattern. In that case, I'll keep my stop loss above this rejection box and take profit 1 ATR or wherever you want to take it. Right. So we had a rejection here, and then rejection here in the zone. Closed with a red candle, shows a bearish pressure, and that pushed the price down. Now at this point, price still didn't make a new low. So we might get a pullback and then a push down again. So if the price pushes down and keep on pushing down, we had a next major zone, which is 1959.45. That goes down to 1947.22. This is the zone. If the price falls, we are going to enter our buy trade with bullish engulfers, double bottoms, or 382 or a pin bar candle. So keep these zones on the charts. When the price pushes down, falls, we are good to go. Long price is now bearish, and we can see a likely fall to this area of value. Yes, we can get a pullback, and then price can follow towards the downside. Let's check silver. So similar as gold, price is now pushing down, and it can still hit the zone below, which is 24.6660. That goes down to 24.03. The price pushes down. This is the zone. This whole zone will be my buying area, from where we will enter our buy trade with bullish engulfers or the double bottom entry pattern, pin bars, 382 candle, all my entry conditions. So I have these zones on the chart. Prices likely to fall. We have, looking at this bearish pressure with swing high engulfing pattern, I'm expecting a price to push down from here. Now let's say if the price pushes down, it just pushes up, then we have this zone to look at, and we can get a possible double top pattern from here. Keep looking for the conditions. Buy from here, sell from here, and the zone above is 25.86. that goes up to 26.39. Let's check crude oil. Nice one. So price is now in the process of a pullback. Now we can still get few more green candles, hit of 50 EMA or hit of 20 EMA, followed by a bearish engulfer. If you have a bearish engulfer at 20 EMA, we have a sell signal. If you have a bearish engulfer at 50 EMA, in that case we still have a sell signal. So keep looking for your sell signal, which is a bearish engulfer. Once you have that, we are good to take another shot. And if the price continues to push down, in that case, a zone below is 73.44, goes up to 74.88, from where we're going to look for our buy trade with one of the entry condition, bullish engulfers, double bottoms, spin bars, or 382 candles. So that is it for commodities, guys. Any questions, any confusions, you can DM me on Instagram. If you are getting value out of my videos, do not forget to hit a like button and subscribe if you're new, so that we can all trade together. Hope you trade green and have an awesome weekend. See you guys in the next video. Till then, take care.